So let's talk about, if you're gonna get a funded account, what are the actual steps that you need to follow in order to pass the evaluation, become funded trader, as well as reach your profit split. Not only the first profit split, but keep making consistent payouts with the prop firm. In today's video, I'm gonna give you a complete guide, including the exact steps that you should follow, as well as risk management guide, as well as the trading strategy that you're going to be needing in order to pass the evaluation and become funded trader. These are the exact steps. This is the exact risk management system, as well as the exact trading strategy that I have been using since I started my prop firm journey back in 2019. So now let's deep dive into today's video and talk about how you can get a funded account. Now the first thing that I recommend, it's really important, because I have seen over the years that many traders who approach the prop firm who want to get the funded accounts, they don't even know how to trade. So having a trading system that not only works at least 50-60% of the times, but you know all the ins and outs. You know when you need to enter, you know when you need to exit from the trade, you know when to avoid trading. These are all the things that you need to understand before you even decide that you're going to be taking the funded account and trying to pass the challenge, get the funded account, become funded trader. So the very first thing, understand that you are not going to be getting any funded account if you do not have any trading system that works. Now I'm going to give you my trading strategy in this video, so stick till the end of this video and you're going to learn a lot that how I personally trade. I did a complete 1-hour video where I talked about the strategy, but in today's video we're going to give you some more examples so that way you can understand more. Now once you have a system that works, do not just jump in to starting with the prop firm. Like, you understand, all right, what are the steps that you need to follow if you want to take a trade? How are you going to be approaching the market if there are certain things happening in the market, if there are certain conditions that you are seeing in the market? These are the things that, yes, you need. However, only understanding that, only having that knowledge is not sufficient enough. You need to know what are the risk parameters, the risk management that you're going to be having based on the risk parameters set by the prop firm. So let's just say, let's take an example, FTMO, they have 10% profit target and they also have 10% overall drawdown and 5% daily drawdown in their step 1 of the 2-phase evaluation. So what you need to do, you know that you have 5% that you are allowed to lose in a day, and overall you can lose up to 10%, but your profit target is 10%. So instead of just risking 1-2-3%, I recommend, if you want to play more conservative. Now what I mean by conservative, that you want to make sure that there is very minimum chance that you will lose the challenge. So just divide that overall 10% drawdown, that 10% that you're going to be getting, into 20. So that means no more than 0.5% risk per trade on any single trade. So if you're going to be risking 0.5% per trade when you're doing the challenge, in case if you lose 3 or 4 trades consecutively, it's not going to affect you that much as compared to if you are risking 1 or 1.5% or even 2% per trade. So imagine you are risking 2% and you happen to lose 3 consecutive trades. Even though you have a system that works, your strategy is not going to give you profitable trade every single time. You may lose sometimes, then you will win, then you will lose, then you will win. It's all about the probability game. So risk management is, if you are risking 2% and you lose 3 trades in a row, you are down 6%. But if you are risking 0.5% and because of market conditions you lose 3 trades, even though you followed your trading plan, you followed your trading system, but you're still down only 1.5%. Now compare 1.5% to 6%. There is a huge difference. So that's why I recommend, whatever your overall drawdown is, divide that into 20, or just stick to 0.5% risk per trade, no matter if you are on step 1, no matter if you are on step 2. But once you complete step 1 or step 2 and then you reach the funded account stage, then reduce your risk even more. Do not risk more than 0.3 or 0.4%. Maximum should be 0.4%. Once trader reaches the funded account stage, it's really important that you control your emotions and you do not rush out to try to get to the payout. Because many times, if you are waiting for a trade and market isn't giving you any trade opportunity, even though you had your plan that you are going to be risking 0.4 or 0.5% per trade, but because of the reason that you want to get your payout, you want to make 4, 5, 6% of your account balance, and you want to get thousands of dollars as a profit split to you, what you're going to be doing, you're going to be making a mistake and you're going to be over risking. That happens to almost every trader who never reaches their payout, the first payout from any firm. And that's why the number of traders who reach their first payout is a lot less. So understand that you need a system that works. Know all the ins and outs of your trading system. Make a trading plan based on the trading conditions that you know, how you're going to be trading, what you're going to be looking for in the market, and then make a certain risk management plan. Once you have all of these, remember, you're not going to be getting trades every single day. So there is no need to rush, there is no need to overtrade. Sometimes it's gonna happen that when you are in a drawdown, you maybe are down 1% or 2%, you will want to recover that so that way you can be back at least break even. And because of this, I want to be back at break even thinking, you're gonna be overtrading a lot. And when you are overtrading, what happens? You don't follow your trading plan and you don't follow your risk management as well. And as a result, you always end up losing the challenge. You always end up blowing your funded accounts. So no over trading, no over risking, always making sure risk management is in place. And also the strategy that you're going to be using, you should know what are the exits, what are the entry levels, when to enter, when to exit, when to do your trade management. Now I'm going to give you my trading strategy. I'm going to show you how exactly I trade, and I want you to watch this, literally watch it few times. If nothing makes sense, do let me know in the comment section, or you can ask in my free Discord community as well, which I very recently have started. Ask in the community, ask in the comment section if there is any confusion, and I will help you understand that. So in one of my videos that I very recently did, I talked about this strategy, but I want to go in detail so that way you understand it more in depth. So what I do every single day, I look for a certain pattern. So I know market, it never just goes up or goes down. Market is always making a move like this. It's making a move to the upside, then making a pullback before continuing the movement to the upside, then making a pullback before continuing the movement to the upside. It always makes higher high, higher low sequence when it is going up, or lower low, lower high sequence. Just like this, it will make lower low, lower high, lower low, lower high, lower low, lower high. Always moves in this pattern. The third market condition, when there is no direction in the market, that means market will be ranging most of the time and it will be moving in one price level just like this. So there will be no higher high and no lower low. So it's gonna be the third market condition which we are always gonna avoid. There is a way to trade this certain type of market condition, but it's really risky as well as very advanced. For now, I want to talk about the higher high, higher low, lower high sequence, or when market is going up or market is going down. Now every time you see market makes a support level. Now support level is from where market gets a support to go up. So when market is getting a support to go up, sometimes you see market coming back again to retest that support level and then it goes up. However, many times you're gonna be seeing that there will be a support level which market will come down back again to retest it or to try to break it, but it will fail. But when it will break it, it should break with a lot of strength from the sellers. This is when we are looking at sell example. It's inverse when we are looking for the buy example. So it's a support level. We know we had a support level here, market retested it, could not break it, went up. Then market retested that level again, could not break it, went up. However, when we broke it with a lot of strength, or we should break it with a lot of strength. Then we are going to be considering it, yeah, it's a good seller's movement that's happening. Now when market is going to come down, it's going to make a strong movement, but at one point it's going to stop, and when it's going to stop, it's going to make a move to the upside. Now this concept that I was sharing little earlier, market is making a move, then making a pullback, then continuing the move to the upside or inverts to the downside. So when market is making a strong move, breaking the previous market structure, it's going to stop at one time, and then buyers are going to come up and make a pullback. When they're going to come up, make a pullback, I was talking about in one of my videos that it needs to have 3 legs in the pullback. Now what are the legs? So the first leg is going to be, let's say that there is some sort of a market structure, like market is making a move to the downside when it was breaking this support level, and there was a strong sell movement. Market is making a move to the downside, but before it makes a pullback or starts to make a proper pullback, it's gonna come up. Sellers are gonna come down again to try to go lower, but they're gonna get failed. When they're gonna get failed, buyers will come up. When buyers will come up, they will make a movement. Buyers, you will see a lot of buyers candle. They will be going up, and at one point it's gonna stop. When it's gonna stop, then you will see the same thing. Market is making move to the upside, pulling back, then continuing the move to the upside, then pulling back, but on a miniature level. What I mean by a miniature level is this was a strong sellers movement that happened. But after that, once we're going to be waiting for the pullback, we need buyers to have less strength. We need buyers to come up, then sellers to come down. Buyers to come up, sellers to come down. That's how they should be moving. So when buyers will come up, there will be some sellers, then buyers will resume. Now this break of miniature level of market structure that you see, the movement that is breaking it is our first leg of the pullback, as we are now in the pullback phase. The movement or the market movement, which is breaking the high of the first leg and is going higher, it's gonna be considered as the second leg of the pullback. And when the second leg of the pullback will end, there is gonna be the third leg, and there needs to be at least 3 legs in the market. When there is going to be a third leg, it should again come higher than the high of second leg, just like the second leg came higher than the high of first leg. And then we need to have a lot of strength from the sellers. So this is going to be our third leg. Now, you understand the concept of first leg, second leg, and third leg. There is one very important point that I want to mention here, is that the second leg should be bigger than the first leg, all right? And the third leg should be weaker and smaller than the second leg. Now, what I mean by weaker and smaller, you see how I made this third leg as compared to how I made the second leg. The second leg was buyers just went up, they went higher than the high of first leg, and then there were some sellers. But the third leg is buyers are trying to go higher, failing, trying to go higher, failing, then trying to go higher, and then they just went higher than the high of second leg, and then sellers came down. So just see this movement from the buyers as compared to this movement from the buyers. Now, what you think is a strong movement with a lot of momentum? Definitely the second leg. That's why I'm saying the third leg should be weaker than the second leg, as well as smaller. So when I say smaller, I mean if we will just count or measure the length of this leg, let's say from here to here, and we measure the leg from the third leg from here to here, the third leg needs to be smaller as compared to the second leg. Now this is like just an example. It can be this much smaller, it can be this much smaller, we don't care, but it should be smaller than the second leg, and second leg should be bigger than the first leg. So that is the concept. And once you see like a lot of struggle from the buyers and sellers are coming down, then we're going to be looking to take the opportunity. Now, one thing that I want to talk about here is that all of this data is on your trading time frame. But make sure always, let's just say that your trading time frame is a 15-minute time frame. We are seeing this data on 15-minute time frame. Make sure that you also go to 1 hour time frame. And on 1 hour time frame, the same movement that we are seeing here, it's going to be like there is a support level, and then sellers made a move, and then the pullback happened, and then sellers continued. So the lot of data that we are seeing on, or a lot of data that we are seeing on 15-minute, it's gonna be of course less data on 1 hour, because 4 candles of 15-minute make 1 candle of 1 hour. So that's why there is going to be difference in between 1 hour data and 15-minute. But we just need to look at what 1 hour is doing, because we need to make sure if we are looking to sell, 1 hour should be in the sell as well. So let's see an example. You see there was this support level, big support level right here. Market tried how many times? Market came here, could not break it. It did try to break it, but came right back in. Did try to break it, but look how strong the buyers went. And then after that, from here, I would say when sellers, they came down and then buyers went up. Sellers, look how strong they made a strong movement, and they ended up breaking this nearest support level. Now of course there were these support levels as well, but we don't care about that previous much data. The reason, if we want to trade today, We need to just look at few days older data, and we don't need to consider data from 1 month old. So this was the support level. Market broke it. It made this lower low. So when it made this lower low, I told you it's gonna try to go down again. It did try to go down. It failed. The first leg came. When the first leg came, when is gonna be the separator? When you will see sellers. So after that, there is gonna be a second leg, of course. And when there will be a second leg, I told you it needs to go higher than the high of first leg, and it should have a lot of strength like this. And then there were some sellers again. Buyers are trying. From there, buyers tried, could not go, sellers came down. In this example, this particular example, the way sellers came was not really strong. However, they did take control and make a move to the downside. I recommend, if you want to go in few of other examples, I did a video, consistent forex strategy. Make sure that you watch it. I have added the link in description, and you can also see it on the screen. Make sure that you watch that video, because that video is really important. So once you are interested that you want to take a sell, we need to know, yes, buyers are not able to make a move. All right, we know, yeah, buyers, they tried. The third leg came, definitely smaller than the second leg, as well as definitely weaker than the second leg as well, because buyers, they were trying again and again. And then sellers started to make a move. So you can take trade from anywhere here. If I were you, I would have taken a trade from here, would have put my stops right above the third leg and my target at the lower low. Now this would have been 2.5 risk to reward ratio trade. Market definitely went lower, but after that it came back in. So that's more like a tilted range. We will talk about that sometime other. Like I will of course make a video when I'm going to be talking about how to trade ranges when market isn't like giving you straight condition. It's not going up or it's not going down. So you need to know how you can trade that as well. So that was my very simple strategy. I have done video of course on it. Just like I said earlier that I did a long video, 1 hour long video, where I talked about how I trade. Then I started my free community right after that. I started it. I'm not really posting it that much, but I'm gonna start of course posting a lot. Do not forget to join if you want to learn for free. I'm not charging anything at all. Link is in description, and do let me know what do you think about this simple guide on how you can get a funded account. You need a trading system, you need a risk management system, you need to get rid of over trading habit, this bad habit of over trading again and again when market isn't giving you any opportunity is gonna have a lot of bad impact on your trading when you're gonna be doing the challenge. And let me know if you have failed the challenge because of over trading and because of over risking. Never rush out. You have unlimited time. There is no need to pass the evaluation in 2 days or in 3 days because someone on social media, on Twitter, is posting, oh, I just passed the evaluation in 2 hours. Things, my friend, they don't work like this. Trading doesn't work like this. Let me know in the comment section what's your opinion, and do not forget to join my free community. I will see you guys in the next video. That's it from this one. Thank you so much for watching. Bye for now.